Hello, traders. Gary Wagner here, approximately 2 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, 17th day of February, 2021, and this is the Daily Report for gold and silver. A completely mixed bag with gold moving down sharply and silver scoring moderate gains on the day. The explanation will be discussed not only in our opening letter, but throughout our technical studies. But to make a long story short, equities are running strong. People are moving their money from a safe haven asset to the risk-on asset class, one. Secondly, we have a strong U.S. dollar. Third, we have a combination of some pretty solid economic data. The three together is that kind of a perfect storm that would make gold lower, and we actually had a death cross beginning to form. It could flip back, but for the meantime, the 50-day moving average is now under the 200-day moving average. We'll look at that right now. Traders, it was truly a combination of multiple effects that took gold dramatically lower, actually breaking well below 1800 at 1775.10, putting it down 2390, or a drop of 1.33%. We did have a stop at 1780. That was hit. That is the difficult news to report to you. We'll have good news when we get to silver in just a second. One of the things that we have to talk about, and we'll look at that when we pull up our first chart, is the fact that in the April contract, we did get a pure death cross between the 50 crossing under the 200-day moving average. Traders, we're looking at a daily chart, April gold, and there are a couple of very foreboding technical indicators that correspond to some fundamentals. The first thing is the low that was achieved came in at a 50% retracement. Now, we do have historical data of finding support in this area, but the one thing that is bothersome to me is the fact that it appears as though we are going into a death cross in which the 50-day moving average is crossing below the 200-day. Now, there's fundamental reasons behind that. First of all, an extremely strong dollar, up about 0.4%. Strong economic data, and that economic data has really propelled U.S. equities to much higher pricing, and liquidity theory will always state that money will flow to where it has the greatest potential return. And that certainly has not been gold. And so for that reason, we did get stopped out. Our stop was at 1780, 1775.10. We are going to remain flat gold. And traders, the saving grace to our trades right now are the fact that we're along both silver futures, silver spot or Forex. We are also long in two separate legs of SLV, which is the electronically traded fund I Trust Silver Shares. We're looking at March silver. That is at 27.44.5. We entered this at 27.36, so we have some slight profits there. But where we really have good profits is in SLV, because that's at 25.40. We entered our first leg at 22.95, so we've got a few dollars per share there. We have stops at 21.95. Our second leg we entered at $1 below current pricing. I feel pretty solid about the potential for silver to move higher in the future, especially if we continue to see the U.S. equities markets continue to rage on to higher pricing. And traders, this is where the disparity between silver and gold become extremely apparent. Typically, they run in tandem. If they're moving up, they're both moving up. In most cases, though, silver's outperforming gold on the way up and having a larger percentage drawdown on the way down. However, look at this. We've had a defined downtrend through really the beginning of the year in gold and pretty much a defined uptrend in silver. And that tells me that they're acting in an unusual way, one that we have not seen because of the fact that they tend to both act as a safe haven asset, but there's more and more applications for the use of silver, and therefore that demand has risen dramatically. And traders, lastly, we are looking at a comparison line chart. It's in daily format, so it only represents the close. And on the top in gold, we are looking at SLV, the iShares. On the bottom in silver, we're looking at silver futures. And what is most impressive to me is typically SLV will lag behind the moves in the futures market. But we are certainly not seeing that now. We are getting pretty much equal moves in the market itself. Just to give you a comparison, I've put up the pricing 25.40 per share of 14 cents, over a 0.5% gain. That is in the ETF SLV. And then when we move to a futures contract, you can see that we're up about 4% or up 12 cents in silver futures. So what that tells me is that we actually are looking at silver futures as well as the ETFs moving at roughly the same amount to the upside, and that's a very rare occurrence. This has been Gary Wagner wishing you, as always, good trading. I wish I had better news on gold, but we do have exceptional trades moving on silver. Have a great day. We'll talk to you tomorrow. Bye-bye.